Yo, what is up, guys? So today we are going to talk on the ICT 2022 model. Now, why this model is compulsory is because whatever I created in past, this is going to be needed in all of my strategies. Either you can be using unicorn model or either 2022 model. So this video is individually going to be made on 2022 model, right? So I would be clearing you everything from A to Z in the video, right? And I would be keeping some of these tips and keeping it very simple and easy to understand, because my goal is to teach you in simple ways, not to make it complex, not to make it complicated, very easy, right? So ICT 2022 model, right? So let's go and get into the video. So to fully grasp the 2022 model, it's essential to go through the following steps carefully. Now we have some of these steps to follow to understand it better, right? So step number 1, trade into high time frame key level. So we should be hitting the high time frame key level in that model, then we'll be trade accordingly, right? So when the price reaches it, a high time frame POI, traders anticipate potential reaction such as reversals or continuation. We will know either if there is reversals or continuation according to the high time frame key level. Now, high time frame point of interest often located in market structure points such as order blocks, fair value gaps, old highs and lows, either sometimes breakup blocks, mitigation blocks, or either you can be considering any other high time frame key levels, right? So these levels are essential in understanding the overall market sentiment and potential in future price movements, right? So it's step number 2, sweep of high time frame liquidity. We should be having sweep of high time frame liquidity or other than the lower time frame sweep of liquidity. We should be keeping these two things in our mind in step 2. So after identifying the high time frame point of interest or significant liquidity zone, the next step involves executing a sweep of any side of liquidity. So now if we are going to the downside, we'll be looking for the buy side liquidity should be taken out, and if we are going for the sell side, we should be looking up at the sell side liquidity. Sell side liquidity should be taken out for buy side momentum, right? By sweeping this liquidity, traders aim to trigger price movements that can potentially drive the markets in their desired direction, right? It depends on the direction of the markets, right? So step 3, market structure shift. Now market structure shift is simply a change in the direction of a market trend. So I will be creating a video, fully video on market structure shift, fake market structure shift, and the market structure shifts, everything, right? So you should be waiting for it. But if you are knowing about the market structure shift, then I will be giving a simple introduction of the market structure shift to understand this model better. So a market structure shift is a change in the direction of market trend, either from bullish to bearish or bearish to bullish. So market structure can be identified by a break of swing high or swing low with displacement move. Now, what is displacement? Simply, displacement is a fair value gap, right? So which is needed in that model. So step number 4, entry at lower time frame fair value gap. Now we'll be first talking of high time frame key levels and EDC, but now we'll be looking for the price to create the fair value gaps in lower time frames after shifting the market structure. Then we'll be looking for the entries, right? After confirming the market structure shift, look for fair value gaps on lower time frames. These gaps represent areas where the price moved repeatedly, creating potential entry points, right? So we'll be looking for fair value gaps to enter as our entries, our buy positions, our sell positions, right? So step number 5, right? So we'll be putting the stop loss. Where to simply put a stop loss? So stops at local high or low. So identify recent local highs or lows. Put the stop loss a bit further from the recent local high for short trades or low for long trades, right? So let's get into the depiction. I'll be making you understand very simple way, right? So we have the step number 1, sell side liquidity, high time from key level, and the step number 2, the sweep of liquidity. Step number 3, the market structure shift. Step number 4, the entry at fair value gaps, and we'll be keeping the stop loss below these low, and we will be looking for the drawn liquidity, which is this buy side liquidity, right? So we have these steps to follow, right? High time from key level, which is compulsory, and then we have this sweep of liquidity, which is sell side liquidity, and structure shift, right? I'm sorry, structure shift, which is this, and then fair value gap, right? So we'll be next watching the drawn liquidity, right? So let's get into the short depiction, right? So this is what it looks like for short trades. We have this high time from key level and buy side liquidity, which has been taken out, and then market structure shift, and then we'll be entering from fair value gaps, and we'll be looking for the sell side liquidity to target, right? So let's get into the charts. I'll be making. So let's get into the charts. I'll be making you understand more better into it, right? Let's go. So we have this example number 1 to understand it more beautifully, right? So we have this old low which has been taken out, which can be act as a support, right? And also it can act as a high time from key level. Why? Because there you can see the daily order block has been respected, and we have been watching the VIX, right? And VIX always tell the story. So we have this old low, which is external vein liquidity. Now our goal is to go to internal vein liquidity, right? I already created a video on this topic, so I'm not going into it. You can be just watching it. For this is daily fair value gap, which is our next drawn liquidity, right? External vein liquidity, which is old low, and internal vein liquidity, right? So which is this old low, right? So simply I'm just changing the name, and now we want to go to see what is going to happen on 1 minute time frame. So now let's go into the 1 minute chart. So you can be using your own model, your own high time frame key levels, your own low time frame key levels. I use 1 minute time frame for executing trades. Price is fractal. You can be trading whatever you want. You should be choosing a model. I've created a lot. I gave you a lot of knowledge. Just choose it and go through your experience, right? Whatever I'm teaching you is piece of knowledge. Collect it and use according to you, not according to me, right? So we have this old low, right, which is support, which works as a support, right? And then we have this high, which is a swing high, right? Which is a swing high, buy side liquidity, right? And we'll be looking for this high as a, which is our swing high, right? So we want to see this high should be broken and close above this high after price is hitting this high time from key level, right? So now let's see what is going to happen. We have this sell side momentum. We want to see the close above this high, right? We have the VIC, sorry, we have the closer right now, which is a structure shift, right? And we'll be adding positions from this fair value gap, right? So we have this fair value gap. We'll be just entering from this, right? Also we have this breaker block, so we can be adding positions from this fair value gap as our 2022 model, right? And then we'll be putting these stop loss below these lows, and we'll be simply targeting 1 to 2. You can be looking for the more, right? But I would be targeting 1 to 2 for personal trade entries, right? We'll be targeting these highs simply, right? So let's see what is going to happen, which is our next round liquidity vibe, because we are going to enter, or we are going to hit our balance the daily fair value gap, right? So simply this is a buy side liquidity, and let's see if we are hitting our limit or not, right? So it's still not in, so we just hit, right? And let's see what is going to happen. So we took out the buy side liquidity, and then again we have this fair value gap, and we want to see these highs should be taken out, or our hit our profit target, right? So let's see. Okay, we hit our target right there. Let me show you another example to understand it more deeply. So this is another example. So you can see these old highs on daily time frame has been taken out, Now we have to go to the downside for the downside momentum. Why? Because price has been respecting this order block, right? So we have another order block right there, which is the daily order block, and we'll be looking for these lows to be swept out, right? So this is the order block, and we have this buy side liquidity resting, taken out, right? And then price has been respecting this order block. We got some rejections. Let's go into the 1 minute chart, right? So let's see what is going to happen. Simply hit the order block right there. So we have this daily order block, right? We have been rejecting, and now let's see what is going to happen. So we have just respected the order block, and we have shifted the market structure. Now you can see we got this fair value gap and also this fair value gap. So you can be entering from this fair value gap either, or either this fair value gap. Why? Because you can be missing some entries entering from this fair value gap. But if you are managing the risk and getting high risk to reward, then you can be actually limiting the orders from this fair value gap, right? I would be suggesting you to go from this recent fair value gaps, right? So we have this market structure shift. Also, we have taken on the buy stops right there. Also, buy stops right there. So we have these two confirmations, right? So now let's see what is going to happen. We have this market structure shift and displacement with fair value gap, right? And we want to see price to go below, right? So we have this price to be entering the short positions from this fair value gap and putting the stop loss above this high, and we'll be targeting 1 to 2, right? So simple, it's very simple, right? We'll be targeting these lows, take out some partials right there, and hit 1 to 2, right? Well, we have this order block also resting. So let's see what is going to happen. We hit the limit from this fair value gap. Again, we hit the limit, right? So let's see. Again, we got the fair value gap. We have been following the order flow for bearish momentum, right? We have huge displacement again, right? Let's see if we are hitting the TP. So we hit TP, right? This is what we call the 2022 model.